The Fed just used one word today in today's minutes that the Bitcoin holders haven't seen since 2022. And last time they used this word, Bitcoin lost 75% of its dollar value. And I'm going to go over all of this today. But the Fed releasing these minutes earlier today was a shockwave that sent through markets. And I want to walk you through exactly what's in here because most people are going to see the headline and panic, but they aren't going to understand what actually happened. So first, let's dive into this breaking news that happened earlier today, where the FOMC minutes dropped not too long ago. Because here's where it's getting interesting. The first was the vote. There was a near unanimous vote to hold the rate steady at 3.5 to 3.75. And that was expected. There's no surprise here. But here's where it gets interesting. Two governors, Stephen Moran and Christopher Waller, actually wanted to cut rates by 25 basis points, and they were severely outvoted. So you have doves inside the Fed who thinks rates should be already coming down. But here's the bomb. The quote from the minutes say that several participants raised the risk of possible hikes in borrowing costs if inflation remains elevated. That's the big thing here, is that they actually talked about hikes here. So when we see this, we saw the US dollar crash and there was the bomb, right? The hikes we're not, hey, we're going to hold here longer. We're going to go higher for longer. Not, we're going to be patient. They're talking about hikes, rate increases. That word has not appeared in the Fed minutes as a forward-looking possibility since 2022. And that's the scary part, because I want you to think about what was happening the last time the Fed was talking about hiking rates in early 2022. Bitcoin was around 40,000. The Fed started raising rates in March of 2022. And by November 2022, Bitcoin hit 15,500, a 77% crash from that all-time high at the time. Now, I'm not saying we're going to already see another 77% crash. We've already seen a 50% crash or so, down for, or maybe even more, down from 120 down to around 60,000. But the parallels here now are a little uncomfortable because Bitcoin's sitting at 67,000 right now, already down that 46%, like I said. And now the Fed is putting rate hikes back on the table. So why are we even talking about rate hikes, everybody? Because we've been hearing that, Jerome Powell is going to be kicked out of office here very soon in May, and Trump is going to get this dovish guy into the office who's going to want to cut interest rates immediately, right? So if the Fed knew all this, why are they even throwing out the fact that the Fed could be hiking rates? Well, it's because of what this Fed governor has said previously. His number one priority is to keep inflation down. And that's their big thing. They're always going to be worried about inflation. But the biggest thing that we've seen here is that inflation is not cooperating with how the market has been acting. CPI is at 2.4%. And it sounds close to that 2% target, right? But here's what the minutes actually say. And I'm quoting it directly here. So this is why I'm looking down here. Most participants warned that progress could prove slower and more uneven than unexpected, and judged the risk of inflation running persistently above a target as meaningful. Meaningful. That's Fed speak for saying, hey, we are worried about inflation going forward. They also noted that the tariff-driven inflationary pressures are still a factor. Now, there's this whole geopolitical thing going on whether or not tariffs are actually justifiable for the Trump campaign. And that's a whole nother different video beside this. But we've got trade tensions, supply chain disruptions, and government spending that's completely out of control. The collective bargaining agreement, or the CBO, just projected a $1.8 trillion deficit for 2026. That's trillion with a T, folks. I'm not saying B billion like Billy the Goat over here. I'm saying T trillion, like time out, stop everything, because we've got a shitload of debt coming our way. And that money has to come from somewhere, right? And when the government spends money it doesn't have, prices just naturally go up. So this is where we're getting these, projections here. And everybody is saying, hey, America's fiscal challenges are serious, but they can be solved, right? So when we keep looking at this number, the Fed is stuck. They can't cut rates because inflation won't die. Let's just face it, right? I mean, I wish that inflation was gone just as much as the next guy, right? I mean, I'm feeling the pain just as much as you guys, but they can't hike rates because the hiking rates would crash the economy. I mean, we've got so much of our debt coming to roost that we need to lower rates. And Bitcoin is caught in the middle of all of this impossible situation. The market reaction is telling you everything you need to know. The dollar is surging during this. Yields are rising. The inflation read from Wall Street is hawkish. They're interpreting these minutes as no rate cuts for a long time. And hikes might actually happen. 92% of odds of a hold in March. The market is actually pricing in 0 rate cuts before the summer. Now that's surprising coming in, with this new Fed chair. And that's where reality is starting to operate in. Because let's zoom out for a second, because this isn't in a vacuum, right? Because Bitcoin has closed red every single month since October 2025. That's 4 consecutive red months. 126,000 in October, down to 67,000 today, a 46% drawdown, right? But there's this rare bearish signal that is showing Bitcoin facing the potential 6-month losing streak, right? This signal just flashed. Bitcoin is on track for a potential 6-month losing streak. And the last time we saw this pattern was in 2022 during the last rate hiking cycle, the same cycle I just told you about. And here's what Bloomberg published today. I mean, this isn't exactly from the Bloomberg terminal, but it is what their headline said, right? And I needed to go to Yahoo Finance to get this official Bloomberg headline, believe it or not. But their argument is that Bitcoin's institutional adoptions, the ETFs, the corporate treasuries, the Wall Street products, they actually made Bitcoin more correlated to traditional markets and not less. So when the Fed gets hawkish and yields rise, when the dollar strengthens, Bitcoin gets crushed. It's no longer the uncorrelated hedge it was supposed to be. And the numbers back this up. Bitcoin is down 40% while the stock market has found buyers, right? Gold is near all-time highs. Even silver is up and it's crushing everything. And Bitcoin is the worst performing major asset class of the last 4 months. Now, this is also another reason why I'm bullish, and I'm going to get to that later on in the live stream. So make sure you guys are hitting that like button and letting me know in the chat what you think of all this, because the ETFs that were supposed to save Bitcoin, just say there's been 6.18 billion in outflows, folks. They're saying we've got a liquidity crisis here. Can you believe it? A liquidity crisis because the whales are accumulating and these ETFs are getting swallowed out here, folks. Right? Goldman Sachs was sitting on 45% unrealized losses on their Bitcoin ETF positions, and they already cut that holding by 40%. 40%. It's insane. Now, before you close the stream and go sell everything, let me show you the other side, because while the headlines are screaming doom, something very different is happening on chain, folks. And that's where I want to dive into more, because there's some major players coming back into this market and buying. Wallets holding more than 1,000 Bitcoin accumulated 53,000 Bitcoin in the last 2 weeks alone. That's $3.7 billion. While you and everyone else are selling and panicking, while the price is crashing, the Fed is talking about hikes. These guys are buying. So that's very interesting, right? And Bitcoin miners, they pulled 36,000 Bitcoin from exchanges in the past few weeks, because Glassnode is calling this what they call a historic low risk zone. Addresses holding 10 to 10,000 Bitcoin added 18,290 Bitcoin in the last 4 days alone. These are like the smart money wallets, folks. The last time we saw this kind of whale accumulation during a crash was in April 2025, and Bitcoin was right around this price at $76,000. And then Bitcoin shortly after ran to the all-time highs at 126,000. You guys got to think, April to October, we went from 76 to 126. And now we're seeing that same buying pressure. So the pattern is always remaining the same, right? Retail is panicking, but the whales, well, the whales are seeing this dip as a buying opportunity, folks. And that's who's coming in and buying right now, is the big dogs. The big dogs are barking here, folks. And they're gonna be looking for this Bitcoin price to skyrocket in flight and absolutely take off and rip, right? And that's where I think this is where it's going to get very interesting, because let's actually talk about, what is happening here, because the same story, the same poop, different toilet, as the kids are saying back home. It happens every single cycle. We see these things happen where the Fed is essentially, we're going to wait until the Fed's going to cut interest rates. Nothing stops this train. Everything's going to print. And then all of a sudden, when, the Fed or Jerome Powell or somebody becomes a little wary of the situation of inflation, well, everybody pulls out of Bitcoin, and then there is a big giant worry. Now, this is where I don't think that that's going to happen. I think that when the market is starting to become predictable and everybody has this group think, this is where you need to become wary. And this is where I think everybody here watching in this chat should be aware of the rumors circulating, all these different things, right? Because let's just face it, if the Fed doesn't cut interest rates in May, they hold for a little bit longer, they're going to cut interest rates later on. So the liquidity is always going to be coming. It's just how long do you zoom out? Now, the funny thing about markets is that markets are always forward-looking and forward pricing. So, when we have Bitcoin, the most liquid asset on the planet, it honestly sends you signals as to what the market is going to do later on, months down the road. We just don't really know it that yet. So Bitcoin is sending us a sign. The Fed is telling us exactly what they're going to do, and they're giving us warning signs, right? So you need to be very cautious about what you're moving with the Fed and not let one man have all this power, right? If Jerome Powell is cutting interest rates and the only reason you're buying Bitcoin right now is because you're anticipating liquidity coming as soon as the new Fed chair comes in May, let me tell you, folks, you have the wrong investment strategy. Look, obviously, it's not financial advice or anything like that, but you can't be going on these short-term news cycle plays to change your long-term investment strategy. And so we've seen the number of wallets with 0.1 Bitcoin shrink during this period. Don't be one of those guys or gals. I know 90% plus of you guys are guys listening in, but girls, ladies, and gentlemen, do not be selling your Bitcoin. Go to saltlending.com/green-candle, and you could borrow against your Bitcoin today so you don't have to sell. I don't know how many times I have to yell this at you guys, but don't be selling your Bitcoin to BlackRock. Don't be selling your Bitcoin to one of these institutional holders. I mean, when you really line it out, it's kind of alarming when you look at how these institutional holders are acting, because we've seen a change in Bitcoin ownership like crazy. Individuals sold nearly 700,000 Bitcoin last year, and that's more than the 500,000 that they sold the year before. So we're seeing the amount that individuals are selling, actually more is getting bought up by businesses, funds, and ETFs. So let's just face it, the selling is going to run out eventually, right? Somehow these institutions, these people buying Bitcoin, they found more Bitcoin than the individuals were selling in 2025. And so I think this is really telling, because let's face it, the businesses, the funds, the ETFs, the governments, these guys aren't the traders types, right? These are the guys that are going to be holding Bitcoin for a long period of time. So when you, the individual, sells your Bitcoin off and you guys sell it to these BlackRocks, these other institutions, right? All of these guys, they're not going to be selling it back to you. So it's going to be harder and harder to obtain that Bitcoin over the long run. And that's where the products like Salt become even more, let's say even more vital and things like that. But we've got like ourselves like a big liquidity crisis. The whales have returned after a big sell-off. And that on-chain data is showing all of this. And that's where I think it gets really interesting, because we've got essentially two scenarios that could happen from here. The first is that the Fed actually hikes rates. This is potentially a nightmare scenario for the short-term price action of Bitcoin. Let me reiterate that: short-term price action for Bitcoin. Because if the Fed hikes rates to 3.5 to 3.75, a 25 basis point hike, assets may dump. Bitcoin may test the 60K and get even lower. And I've heard James Check on a podcast recently say it could go even lower than that. And Bitcoin will probably test the 60,000 mark, maybe even lower than that. And then every leveraged position could then get liquidated. The ETF outflows will then accelerate. Headlines everywhere will be saying Bitcoin is dead yet again. That's what we always get, folks. But, and this is critical, Bitcoin supply will not change. And something that I like to always show here, for those of you guys who keep coming back, make sure you're subscribed. But I love to show this chart here, the Bitcoin on exchanges chart, because even during these Bitcoin crashes, we see the number of Bitcoin on exchanges still floating around 2.5 million, right? So the Bitcoin's price is coming down, but look, Bitcoin's price is coming down. And in December, there was over 2.53 million. And now we're sitting at 2.48. So 50,000 Bitcoin came off of exchanges during that crash. So what does that mean? That means all of these guys, right? That means that the big players that are buying, they're either going into institutional custody or they're getting locked away, and they're not coming back on the market anytime soon, right? We got Dub saying that he's convinced his wife to live like an Amish woman to save the money and invest in Bitcoin. Dad, I hope you get the skyrockets in flight soon then, Dub. Because, oh man, I hope that this will pay off for you, buddy. Because I think it will. You see these Bitcoin on exchanges, the notes here, it's going down. The second scenario is, let's just say the Fed actually holds rates, right? Jerome Powell gets tough. He says, you know what? I'm going to hold strong with you guys, and I'm going to cut interest rates, or I'm just going to hold directly, right? Like I'm not going to move. We get the everybody move kind of move, right? The nobody move, right? That's what he says. He walks in, he's got his little thing going, and he's pointing, and he's saying, nobody move, get on the floor. The Fed's going to hold tight. And this is the most likely scenario, in my opinion, because this is what the market's pricing in. The market's actually priced in some rate cuts and now is maybe backing off on that. But the Fed talk could be tough, right? They could be acting real tough. They could be puffing their chest out, the scrappy do, having their fights going, all bark, no bite. And the hikes are just on the table. That's what they're saying, right? But they never actually do it. Inflation slowly grinds down. And by Q3 or 4, they'll start cutting rates again. And when they do, that's the rocket fuel that the market will need. And we'll see Bitcoin absolutely take off. But the interesting wrinkle of all of this is obviously Q3, Q4. That's when we start to see the midterm election stuff start to come up. And so if the midterm elections are coming up, we all know Donald Trump is going to want those rates low so the market can be pumping, so we could get more Republicans back in the office. That's what he's going to want, right? And so that's where it's going to get really interesting, folks, because we do have an interesting little metric here that isn't the normal one that I show you here. The Bitcoin inter-exchange flow pulse. So it's still in its bearish phase, but it's starting to flatten out. And this means that the bearish momentum is losing steam. And this is typically what happens at cycle bottoms before the reversal. And I'm not saying we're 100% at that bottom yet, but Saylor posted today, spring is coming. Bitcoin is winning. And now Saylor is always bullish and he's always buying. That's literally his job, like every week, like clockwork. He announces every Monday, but if, markets are closed Monday, he'll announce Tuesday that he bought again last week, right? It's his job, essentially. 95% of all institutional buying in January was all strategy. So, yeah, sure, right? But he's also the single largest corporate buyer of Bitcoin in history, and he's still buying, right? Let's just face it, he has 700,000 Bitcoin. He really doesn't need to keep buying. But here's what I think is really happening. And here's what I think the Fed is doing, because this is what they always do, right? And here's the Saylor tweet, or an article about it, right? The Fed is doing what it always does. It's managing those expectations. They put hikes into the minutes to keep the markets disciplined, to prevent everyone from front-running rate cuts. They don't actually want to hike. They want you to think that they might hike so you don't get reckless. And Bitcoin doesn't care about the Fed long term, right? Bitcoin cares about the supply and demand. And right now the supply is fixed and the halving has cut new issuance. Individuals are selling and institutions are hoarding and miners are holding, right? And you guys need to be holding your Bitcoin off an exchange, because people are getting reckless out here, folks. So go to the affiliate link down below. Get yourself a Trezor Safe 7. I've got mine. I'm traveling all the time. I'm coming to you guys live from Austin, Texas today. I'm going to Florida on Sunday, and then who knows where I'll be in the next few months. I'm just a wild man. But the thing I love about Trezor is that as long as I have it, I can connect it to my Bluetooth, even if I lose the cord. And let's just face it, I'm not going to lose the hardware wallet. I'm making sure on that. But cords, I just throw everywhere. And so being able to connect to my Trezor hardware wallet is so easy. So that's why I love the Safe 7. I recommend you guys go and get one. Get your Bitcoin off an exchange, because we've already seen bank failures this year in 2026. We've already seen some cracks come through. And, this Bitcoin whale behavior shift is something that I think is really interesting, because when we see, I'm scratching the chin here just thinking, when we see these whales start to come in, it's not the shakeout that we expected, right? Because we could see potentially more downside, like you guys are saying in the chat. There is the potential of seeing some more of that downside risk. But I think that the Fed didn't change anything about Bitcoin today. I know they did, actually, right? What are the 3 things that you guys should do right now? You shouldn't panic sell, because this is exactly what everybody's doing, right? We guys are all saying, hey, the weak hands are panic selling. The weak hands are coming through with this, right? They're the ones supplying these institutions and giving their Bitcoin to BlackRock. What are they doing? As you guys heard in that interview I had with British Hodl, everybody sells Bitcoin at the price they deserve, right? It's not necessarily the other way around where everybody buys Bitcoin. Unfortunately, people just keep on selling. So then what else do we see going on, right? If you zoomed out 4 months of red candles, and it might feel like the end of the world. And I'm not telling you to go all in today, but when the whales are accumulating, why aren't you? Do you think that you have more financial power than these giant whales that I'm lining out to you that are buying? Because this might be the opportunity. When you see 53,000 Bitcoin get bought in 4 days and miners are pulling Bitcoin off exchanges, you got to ask yourself why. And, we haven't seen Bitcoin at this price in quite some time, 66,000. So, like I said, if you liked Bitcoin at $125,000, why wouldn't you like it at 66? Like half that price. Bitcoin's on a 50% discount. I've worded this before, that if you buy toothpaste and you need something like this, right? Bitcoin is money. You need money. If you see all these things, right, and you see it as 50% off, why wouldn't you load up on it? It doesn't make any sense to me. So this is what's going on in the market. The Fed is trying to scare the market a little bit. I personally don't believe that they're going to cut or hike, let's say, in the future. I think they're just going to keep staying put. And Bitcoin's just going to be fine in the long run. In the short term, we're seeing the negative reactions, and Bitcoin is a key indicator for how the market is going to react in the long term. So be sure you guys are smoking that like Cheech and Chong, hitting that subscribe button, telling a friend to tell a friend, and I'll catch you guys all at the next one.